Well, we know the Fed cut the federal funds rate back on September 18th, and intuitively, many people believe that mortgage rates are falling. But hold on, what if I told you that mortgage rates are actually on the rise? Hey guys, it's Evan Swanson here of Guild Mortgage, and let me share a few slides with you because the reality is mortgage rates are actually increasing modestly since the Fed cut short-term rates back on September 18th. You can see it here, 30-year fixed rates up a little bit. Now, why is that? Well, number one is this man, Alan Greenspan, who was the chair of the Federal Reserve starting in the late 80s through 2006. And the one change that Chairman Greenspan made was he made the Fed much more transparent and much more proactive in terms of communicating to the financial markets the Fed's intent. So the reality is that mortgage rates didn't wait around for the Fed to cut rates. Since October of last year, mortgage rates have improved by 175 basis points from peak until now. And the reason for that is all along the mortgage industry has been anticipating the Fed rate cut. And now that it's actually happened, it's kind of old news. In fact, the last 3 times the Fed has done an initial rate cut, you can see here that mortgage rates have actually increased following that initial cut. It happened back in 2001, happened again in 2008, and it began to happen again in 2019, but then COVID set in. So, we'll never really know what would have happened there. The reality also is that the spreads between 30-year fixed rates and U.S. 10-year Treasury notes remains wide. The good news here is that we expect these spreads to tighten, which means we should see better mortgage rates ahead. So, bottom line, the Fed has cut rates. That doesn't necessarily mean that mortgage rates are going to take a straight line down. In the immediate term, I won't be surprised if they stay a little elevated here, but eventually we will see them turn around. Thanks so much.